ready to take your investment game to the next level? Introducing Digital Investor, your ultimate guide to mastering the digital marketplace. Whether you're a seasoned pro or just starting out, Digital Investor brings you cutting-edge game theoretical strategies, expert insights, and real-time tips and tactics to analyze, evaluate, invest, and grow your wealth. Don't miss out on the digital revolution. Visit www.nickblacknex.com and start your journey with Digital Investor today.
Listening to the mellow sound of finance gobbledygook radio. Brandon, what do you think? Do you think that'd be our new show on CNBC? Finance gobbledygook.
Yes. Well, they already have 4 of those though.
Yeah. Well, matter of fact,
Finance
that's the whole network.
That's yeah. We'd be like really in a lost in a pond.
Let me tell you something interesting about Shark Tank. Those people that you think are billionaires, they ain't billionaires.
Probably not billionaires.
Most of them aren't. They use some very suspect accounting. I know personally 2 of them that are fakes. I know for a fact. I can't say why, because that could get me in trouble, but I can tell you with 100,000% certainty, 2 of those people that you see, if you watch Shark Tank on a regular basis, are full of fucking shit about their money. And that's all I'll say. That's all I'm going to say about that.
Wait, is it Mark Cuban?
And it's not Mark Cuban. Mark Cuban does have money, although he's squandering it. He's squandering it quickly. Trust me, it's like leaving faster than it's coming. But at least he's a billionaire still, technically.
Yeah, I think that. Yeah, I think that's true. I think that's true.
Yeah. That's all I'll say about that. Okay. So we got a lot to talk about. We got a lot to chat about. What are we talking about today?
Well, we were supposed to get some information from the White House today on crypto. I guess they had a big press release. Anyway, they released the notes. It doesn't say anything about the Bitcoin strategic reserve, so people are to guess. But it does say they're going to do no taxes on de minimis payments.
So that's now, where do they draw the line for de minimis? Is it 300 and below or 600?
I didn't see an amount. So I think they're supposed to go into detail later this afternoon. So I bet they'll cover that amount. So that's the 2 numbers that I've been seeing back and forth, 300, 600, right?
Now,
so anything less than that amount.
Does that mean, let's say they say it's 300. Can I send 5 $300 payments a day and buy a Rolls Royce?
Yes, in perpetuity.
Yeah. Just have it auto debit $300 over and over and over all throughout the day. And then, because it's about $1,500 a day to buy a Rolls Royce, and then just do that for the next 3 years. And then I get a Rolls Royce tax free.
I see why. I don't see why not. Do you?
Oh, I like it. Although
the shenanigans of the
you already get a Rolls Royce tax free. You know that, right?
What? If you just get a loan on your money.
I just got an epiphany.
What?
Okay.
What?
Okay. Listen. You know how it works, right? The Rolls-Royce Spectre, it's over 6,000 pounds. Therefore, it's a utility vehicle. Therefore, it's 100% tax deductible from your company.
Oh. Nice. Okay.
Meaning, when we get your taxes up to a certain point where it's going to be that same amount, we're going to go Rolls Royce shopping for you. Because would you rather have a Rolls Royce or pay the man? Wouldn't you rather have a Rolls Royce?
Well, now that you mention it, yeah.
I bet you might be the only one in the whole state.
I was just going to say, I don't think there's a Rolls Royce in the entire state. I don't think there's a single one.
God, here you get stuck in traffic. You have to crash into them to get out of the way of Teslas.
Oh, jeez.
Yeah. So, okay.
Well,
did the stream,
so that's the first thing that came out, which I think is we'll kind of have to wait till later today to see kind of what's going on with that, to find out the details in that. The other thing that I did see here, let me share my screen for this. Boom, 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 boom. It's actually kind of a lot of cool stuff happened last night.
Okay, wait, real quick, Dave. Thinking about ETH, older people who don't open wallets to buy ETH stock, thinking it's really ETH. What? Wait a minute. What do you mean? Are you saying people buying the Ethereum ETF? I mean, it'll be interchangeable with.
I have that news on that right now. Actually, should we hit that first?
Yeah.
Okay, so yesterday, let's hit that since we're talking about it. Yesterday, this is from Paul Atkins. It's a new day at the SEC, and a key priority of my chairmanship is developing fit-for-purpose regulatory framework for crypto assets. I'm pleased the commission approved these orders permitting in-kind creations and redemptions for a host of crypto assets ETPs. So what does that mean? So it means you can now exchange, as soon as they get all this the wiring done, you can now exchange your ETH for Ethereum directly. Same thing with IBIT. So you can exchange your IBIT shares for Bitcoin directly. So this is in-kind redemptions. They approved this yesterday. And so now they just got to do all the plumbing. And I think you're going to be able to, how's that going to work though? So you're going to take your ETH and what wallet? Do you have to give them a wallet address or whatever? And it goes to like a Bitcoin wallet?
Or they will push it to an exchange account. Or what you'll do is you'll set up, I'm sure there will be agreements.
KYC.
Yeah, but I'm thinking there's going to be agreements. Well, you've effectively KYC'd if you're already owning ETH, right?
Yeah, that's true. But you'll have to do like a KYC exchange account.
Yeah, so like Fidelity would use Coinbase. Most of them will probably have a Coinbase account. And that would be very interesting because if they spit off accounts, like you might enter your information and it might reach out to Coinbase and say, does this person have an account? They'd have to verify. But if they just gave you an account that was linked to, let's say, your Morgan Stanley or your Fidelity, then they could just go poof, poof. Or they would make you set up a new account specifically for that, for the sake of tax situations.
So, yeah, I think that's the way it's going to happen. So what does that do? That creates another adoption on-ramp that's seamless now between old TradFi world and new crypto world. Mm-hmm. Because then people are going to be able to exchange their crypto for ETF stuff and vice versa. So they're immediately going to be onboarded to crypto and they're going to have all this money in crypto in Coinbase. And they'll be like, well, that was easy. Then they're going to be like, realize that crypto is just like another another commodity that they can exchange easily. And so there's going to be infinite amount of money coming into the crypto space that wasn't here yesterday, 2 days ago.
Let's ask Peter Schiff if gold's going to have like-kind redemptions.
Let's do. It's so funny. He's like, well, I can trade digital gold. I'm like, well, that kind of makes the whole point of gold. Like your only argument is gold has a use case. Yeah. Like Peter Schiff's like, well, I can melt down my gold and it's a watch. How are you going to melt down your paper gold into a watch there, Peter Schiff? Like,
well, at least it won't matter because idiots are going to be melting. These guys are going to be melting down mercury, fusing and melting down mercury to make gold anyway. So old Pete's going to be out of a platform here pretty soon.
Pete's done. Let's be honest.
Whenever gold gets real cheap, dude, I'm gonna be dripped out. You're gonna see. I'm gonna have big like dog collar neck, like the big thick chains. I'm gonna have actual gold chain links the size of like real, like a boat anchor chain, a boat, like a Navy boat anchor chain.
When it gets to like $10 an ounce again.
Yeah. They're like, damn, that dude is dripped out. Okay.
So in addition to this, you got to segue over to the JP Morgan stuff, right?
Oh yeah.
So this happened yesterday as well. Big deal. JP Morgan Chase and Coinbase launched a strategic partnership making buying crypto. Remember who JP Morgan is, right? Jamie Dimon. Yeah. So this guy,
Jamie, you will get fired if you have Bitcoin.
Yes, Diamond. Yeah, Jamie, you will be fired if you have Bitcoin Diamond. Anyway, They are launching a new direct bank to wallet link. So they're going to link up with the Coinbase wallet. They're going to integrate seamlessly the Chase credit cards system. So you'll now get points. So you get Chase reward points for your Chase credit cards. And so now you can use 100 of those points to buy $1 worth of crypto seamlessly in your Coinbase account. So instead of having to redeem those points for like gifts or Amazon cards or whatever, you can now get crypto with those points directly. And so you'll be able to interchange crypto and your bank account, your Chase account, and your Coinbase account seamlessly, all integrated into one, to where it's basically the same thing. Kind of cool.
You start to wonder who's going to start acquiring who first, because it's been crypto companies.
That's what I was wondering.
Yeah, it's going to be crypto. It's been crypto companies trying to buy small banks. I think it's going to go the other way, and big banks are going to consume. I bet you. I mean, Coinbase has always wanted to become a bank. And maybe this is JP Morgan saying, if we do this deal, maybe it slows Coinbase down a little bit.
Well, I think that was the discussion before. I think Coinbase had been starting to get their charters and stuff, and JP Morgan's like, wait, we're going to get smoked. We would rather join teams with the enemy than let the enemy devour us.
Yeah.
Which that's what would happen. And so this is the outcome. This is what we're seeing in real time.
I bet.
And
in a year or less, you will be able to custody Bitcoin and or Ethereum at just about any of the top 10 banks. Maybe top five, because there's some infrastructure concerns there and stuff like that. So let's say the top 5 big banks. Chase, Wells Fargo, Bank of America. Well, we know Bank of America because they already said. We know Charles Schwab, but that's not really a bank, although they may have some kind. But I'll bet you a dozen donuts, Brandon. Yeah. Okay. Wouldn't the brokerage accounts custody Ethereum and BTC? No, they can't. In the same way that the brokerages don't custody Bitcoin or Ethereum currently.
I don't think they have the rails for that yet to custody that stuff. That may come, but I think quicker access, because if they're going to do these in-kind redemptions tomorrow, I think they would have to link a Coinbase account or something that can custody crypto.
Well, the brokerages are using the same custody agents. Like if it's brokerages that are participating in the ETFs, like Fidelity and BlackRock and all that, well, then they are. I mean, I know BlackRock's not a brokerage, but Fidelity certainly has a brokerage arm. They still do all of their custody through Coinbase Custody or Prime.
Yeah, so that's one half a step. It's already there. Yeah. It's just changing the account number. Yesterday, man, we had a big news day yesterday. So this is a big deal. I think this is a bigger deal than people. I don't know why the markets. I honestly don't know why Bitcoin is not 200,000. Like on top of all this, you had a lot of buys yesterday. Oh. It looks like Michael Saylor bought his 2.5 billion yesterday. All of those STR, the stretch funds, he used every single penny yesterday. Bought a 2.5 billion. Anchorage bought 1.2 billion. 21 Capital bought 684 million. ETFs bought 600. That's $5 billion in purchases yesterday. And we're just chilling. We're lower than yesterday. No big deal. We're lower. It just doesn't make any sense why Bitcoin's not 200K, especially with all this news that's coming out. The SEC acknowledged yesterday. They acknowledged it. So BlackRock filed for staking in their ETFs on July 17th. So it took the SEC only 13 days. They acknowledged it. Once they acknowledge it, that means they're like, okay, everything looks good. We'll go through this and we'll approve it sometime soon. So this could be approved very soon, meaning staking is going to be wrapped up in the ETF. And once these yahoos get more yield on their ETF products, they're going to be buying more Bitcoin. Bitcoin is still getting outpaced by Ethereum purchase on ETFs right now, still.
Bitcoin is or Ethereum?
No, Ethereum's outpacing Bitcoin now still. It's crushing it. The Ethereum Foundation Also, dude, ETH has all the good headlines right now. So this is that they released this yesterday. Today is their 10-year anniversary. They were claiming, well, I mean, it's true. They've had 10 years without a single outage, which is pretty dope, actually.
Yeah.
Especially when you look at Solana and all those other chains that are just struggling to go
Solana,
1 year without an outage.
XRP, yeah.
Yep, all of them. So pretty cool. ETH has went 10 years. They've had 16 upgrades in that 10 years while the plane is flying without a single outage. Pretty impressive. So Ethereum's, I think, better than people give it credit for. And so that is why it's the number 2 asset. So pretty
it's
cool.
Resilient.
It is resilient.
I mean, I don't, again, even with SEI and some of these other SUI, SEI, if you're a bank, are you going to launch your stable coin? Or if you're a company, if you're a real company, are you going to launch a stable coin on Solana? You're not going to risk that. Are you going to launch it on Tron? Absolutely not. Are you going to launch it on, I mean, you just aren't. Are you going to launch it on SUI or SEI? Hell no. You can't. So you wonder, like, what are all these guys fighting for? So there's the investment side of people chasing the new shiny investment thing. And there's probably something there as far as some early multiples that you get for just being early in a thing. But when you step back and you say, what is the next Ethereum? Ethereum. Who's going to supplant that? Cardano? Come on. They can't even, in his home state, they can't even get Cardano as one of the potential token platforms for the state to use. In his home state, where I'm sure he drives his Lamborghini up to the state house and parks probably halfway in someone else's parking spot and halfway in the handicap spot, which I'll give him that because he's kind of mentally handicapped. And they probably can't stand that dude. Like, you're just like, so when you look at all these companies, especially older, more established legacy financial institutions, they're not using any random layer ones. They're just going to use Ethereum or maybe a layer 2 if the group, like that team came and begged them and sucked off everyone in their office and like for months and months and months, like, but otherwise you're gonna launch your stable coin on Ethereum. Tom Lee said he thinks a conservative view is half of every stable coin launched after the Genius Act is going to go on Ethereum. He said if that's the case, then Ethereum is just way too undervalued. It's priced correctly, it's undervalued. Believe in something.
Too true. I think Ethereum is undervalued as well. And we see that in the chart when we look at the past 12 months performance. It's so undervalued. But here we sit.
Do you think ETF staking will trickle down in the form of a dividend or it will offset price? I think it's going to be the way I look at it is it not only offsets any ETF fees you would have. I thought about that for a while. I thought, would they do it as a dividend? They can't really do that because that creates a weirdness in the situation where, especially in the options market, like companies that offer a dividend, if you buy the option on certain weeks or you sell an option, you also have to give the dividend and all this kind of weird stuff you have to do. Like if a call option got exercised during the week where a dividend is supposed to be paid, then you have to pay all that kind of stuff. I don't think they're going to mess with that. I think it's going to look a lot like wrap stake Ethereum, where the price just goes up proportionally. And it'll just be that there's like a 3.5% premium that gets attributed to the ETF in real time, propagated out through the trading days of the year.
You know what? That would be an even bigger win too, because that means you don't have to pay taxes on dividends because it would accrue within the price of the ETH A. So if you just own like ETH A and you never sold, it would go up 3% more per year than it normally would. You just get it.
But remember, this is a weird thing. This is a new kind of thing for commodities, because you've never had. It's like if you were buying, bulk oranges and you bought 100 oranges, but then they delivered 103 oranges. They're like, oh, I thank you for those extra oranges. So I think it's kind of like that. I don't think they would give you 0.75 oranges 4 times a year or something like that. I just don't think it's going to work that way. I'm sure they're going to do whatever's just the easiest. And since, I don't know, I mean, I guess we'll see. Maybe we should take whatever document that BlackRock filed, because I'm sure structure is in there. I'm sure it's in that document. I bet GPT-4 knows.
Yeah, throw it through GPT and see what happens.
Yeah. A layer 2, it seems layer 2s have been put to bed at this point. Yeah, I mean, I think so. I think layer 2s got their eviction notice a few months back when Vitalik woke up. And I think the writing's on the wall on that. Again, you're like, okay, we're going to use a layer 2 of Ethereum. And then I'm the old executive like, well, why don't we just use Ethereum? Why do we need, you know what I mean? So like, I just don't know if you're a company and do you build on a layer 2? Maybe that team exists in 3 years. Maybe they don't. They have to deprecate. You can't launch a giant stable coin and then deprecate because the support ecosystem and all the devs went to another project. So I think there's that risk too, right? The technology, kind of the support risk. I don't know. I think it'll be mostly Ethereum. 30. Okay, Brandon, what else we got?
Why would you build on a layer 2 when you could build on a layer 1 right now for I haven't seen Gwei spike even through any of these like crazy machinations of price at all. Like it's been pretty decent. And so if Gwei's not going up, there's no reason not just to build on ETH. So,
will ETF staking on Ethereum change your mentality on selling puts to possibly leaning towards buying ETH and selling calls? No, it's the same. Same.
Yep.
Nothing changes. You're just getting a 3% premium, Bob. But it wouldn't change your strategy. 3% spread out over a year is roughly 1/100% a trading day. That's not 1/100% per day. It's not a lot. You're not going to just see that. Even in a week, you're not going to be like, God dang, I'm rich as hell. I'm rich. So yeah, I think you will just, it's something that's cooked in. Hey, by the way, if you own ETH or Ethereum, because you'll be able to do like kind, you're going to have an appreciating asset where the ecosystem is building and the asset itself appreciates due to this internal function called staking. Does Bitcoin have staking? No. I want that one that gives me staking. I mean, yeah. Yeah, and it's just a little benefit. It's just one more thing where if you're like, oh, if I'm investing in Ethereum, or if I'm investing in Bitcoin, what would I rather invest in? Well, if you're someone that's trying to play catch up, which everybody's trying to catch somebody, then I think that probably the argument for owning ETH would make more sense now that staking. I mean, even people that own Ethereum might be inclined to park it in ETH. They knew that they could sell options against their ETH. That would be cool. Certainly. And that would change things too, because then, that would definitely change things. You'd have to look at, our whole idea of borrowing against Ethereum or borrowing against Bitcoin. Maybe there's some thought there. For instance, if you can do like-kind redemptions and you get staking, Brandon, would you then give consideration to reverting back, basically buying back your Ethereum and then just taking your Ethereum, pushing it across to your trading account and selling against that because you'd have twice as much to sell against?
So in-kind redemptions. I guess if I got put into the ETH, and then I could just get back into Ethereum. I don't know.
I'm saying the other way. I'm saying
What?
we basically levered up our Ethereum, took some cash, put it over in the trading account. Now we're trading against that pile of cash. Would you bring that pile of cash back, then get all your funds back in Ethereum, take your Ethereum, push your Ethereum over to ETH, then sell calls against that, because you'd have twice.
Because then it would be 100%.
Yeah.
Oh, so then you're just saying get out of crypto, basically get into ETH.
Well,
but you're still in crypto because you're still owning Ethereum, right? Yeah, I probably would. Why not have double?
Because you have twice the exposure.
Yeah. Why not? Why not?
Interesting. So it means that perhaps, once this happens and it's for sure, and we look at how it works, because it could be kind of gummy how it works, and also if it takes 10 days to transfer and all this kind of weird shit, but you might then have a strategy of like taking some of the cash that you're generating and going and buying your Ethereum back, and then swinging your Ethereum back. So like just doing a circle.
Yeah, I think
I'd rather have twice the firepower, right? Wouldn't you rather have twice the firepower? And
100%.
And some exchanges, will offer you a line of credit against your account.
Yes.
And I did think about taking that line of credit, as long as depending on if they charge you for it or not. If they just extend you a line of credit and there's not some ridiculous fee, seeing if you could then, like, you could go buy treasuries that pay 4%. Yeah.
So the only downside risk to doing this is right now you're basically using 150% of your funds. So if you didn't get the line of credit, you'd be using 100% of your funds.
Well, no, you're not using 150. You're holding half. No, because the part that's levered is not. You're not selling calls against that part.
Right, you're not selling, but you're still getting the gain in the ETH, right? So you have 100%, 100 ETH.
Yeah, it's like you have a margin account. Yeah, it would be like having a margin account for 50%, but the 50% you can't sell against that 50%.
Yeah. Interesting.
That's right. You'd have to look and see, like, is the 50% extra asset better than having the ability to sell against the entire? So you have to see how quick can you get to 50% versus the asset appreciation. Probably right now, because of the future of Ethereum and the asset appreciation, you wouldn't want to just mess with anything. Right? You'd rather just leave things the way they are. And then if you think that Ethereum had topped out or flattened or gotten conservative, that's when you start going roundy round.
Yes.
What say you?
Be tough. I think like you said, I think you'd have to see how gummy it is, how messed up it is. But I still think you'd start to slowly move it over, because I think you'd be better off using 100% of it with options, most likely.
Now let me ask you this. I know that you can't margin any of this stuff now, and I don't think anybody here should use margin. However, we did, with the help of GPT-4, we did come up with some margin strategies for selling deep in the money calls with your margin. So if you were granted margin on your ETH in that account, would you use it to buy ETH and simultaneously sell really deep in the money calls, probably out a month out, where you get a big premium, but like at 30% discount, meaning a price 30% lower than it is. So you would be selling the 22s or the 20s, right? As a for instance, like the calls.
I guess you could do that now, essentially, if you wanted to.
Right, but you couldn't do it with margin. So what I'm saying is, if you were granted margin, would you be willing to use your margin to do something like that, to just grab the time premium, to just mine the time?
You probably would, because you're still making an extra Uh, and I bet it'd still be an extra 8% a year on top.
I bet it'd be more than that, because think about it. You're taking the time alone, right? Which is minimal.
You'd have to go. You could just go look at the options and see how much the 22s are and figure it out.
But what I'm saying is, it's really that times 3, because let's say it gave you the traditional margin, like 4-to-1 margin, you could buy 3 times as much. Yeah.
You think I mean, if it did, I think it's gonna be a while before you get any margin on your ETH, though.
So someone told me, and I think it was John, I think one of the DPCs, I think he told me that at his I think he's with, I don't know if he said Charles Schwab or something, but anyway, where he's at, he can margin.
He already has margin on the ETH or the IBIT? All of them.
IBIT. I think IBIT.
Okay, that's dope.
But which is I guess it's up to the exchange then, isn't it?
Yeah, it really is. I mean, and here's the thing, they keep trading all the time too. They always change your margin requirements and limits and stuff. But yeah.
Now, do you think they'll ever go to 24-hour trading on these commodities?
Yes. I don't think they cannot. I don't think they can't. It doesn't change anything really. I think they eventually have to do it. They have to.
I use margin. Okay, so Charles Schwab, maybe it is Charles Schwab. Use margin on ETH A. Well, okay. Mike, you can probably do all sorts of shenanigans then. Well, yeah, Robinhood doesn't.
They'll let you do anything. I think they give you 90% margin, 9-to-1.
Yeah. Yeah, be careful with Robinhood, because they actually trade against you. Like, they actively trade against their clients. That's how low the IQ of their clients are. This is not a joke, by the way. They trade against their clients because the assumption is how stupid their clients are. They word it differently. They call it market making. They trade against their clients. That's why they got into, anyway, whatever, doesn't matter. Okay, so Charles Schwab. So maybe it was Charles Schwab. What margin, Mike? What margin do they give you? Like, is it 400%, 300%, 50%, 30%? I'm sure it's a very tight. I'm sure it's pretty tight. But if I had the ability if I had margin ability, then I would have a strategy of selling deep in the money calls. I would do buy rights. It's 1-to-1, so 100%. That's free money right there, man. But you got to be very careful. So what I would do is, with the regular account, I would keep doing what I'm doing. With my margin, I would sell really deep in the money calls. I would do buy rights. I would buy ETH A and immediately write calls deep in the money that I was guaranteed to get called out of. Deep. And I would just take some time premium. I would just make sure there's some time premium in them. There's going to be. And so you may have to sell 2 weeks or 3 weeks or a month out to really get any kind of real anything. But dude, like Brandon, would you sell against ETH A? Would you sell the 22s, the 23s, like in the money calls?
Yeah.
Why not?
Safety strategy. I like that.
Yeah. And it's just all you're doing is it's purely time decay farming. I do the puts with it. With margin?
Wait, you're talking not the 22 call, you're talking like the 38 calls, right? The $37 calls?
No. I would sell. Oh,
you want to get called out?
I want to get called out because I don't want to have to worry about the price dropping.
Oh, so it protects your downside, is what you're saying?
Yeah. Well, there's no downside. Like, it's unlikely that that it would deteriorate by that much. So you just say, I'm gonna only take the theta. I'm only gonna take the time decay. And so that's why you may have to do one that's like 3 weeks out or 4 weeks out to get a little bit bigger kind of chunk of time decay there.
Yeah.
But what I'm saying is it's just guaranteed extra yield.
Yeah, it is.
And I bet it's 1 to 2% a month. I'll bet you.
Let's go see. We can go see. Sorry, I had to get off my VPN to get in there.
Should we check?
I'm trying to log on. Yeah, good. You might be able to check faster than me.
Okay,
it locked me out because I was trying to log on with a VPN, so it killed me.
If I'm in ETH and I go out 2 weeks, So I go August 1st, August 8th. I'm going to August 15th. And I need more strikes.
I'm going to add it.
Okay, if I'm going August.
Let's see what ETH price is right now.
So it's got a
28.70.
28.21. Okay.
Yep.
And then I go out to August, let's say 22nd.
Okay.
And I sell the 23. Okay.
23. That's 20. That's 27.
That is a giant spread, though. Okay, I have to go.
It's not that big of a. Yeah, I guess it is. That's not.
I got to go to the 2350 but 2350. I would be comfortable selling that.
Yeah. Okay.
It's 550 to 565.
So 23, you would sell it for plus 550. So you basically, you lose 20 cents. So you would have to sell it for. You got to sell it
for the full pop. Yeah.
Yeah, you got to. Still, you'd lose 5 cents even if you sold it for the 565.
See, that doesn't make sense. That means this price isn't tracking completely accurately.
That means there's no premium in those, which kind of makes sense because.
Yeah, there should still be time.
They're too deep. They're too deep in the money.
Yeah, what it is, this is a function that this market is not liquid yet.
Yeah, sometimes the way deep in the money don't even have any time premium left in them. Like if you go
there's always going to be
the money.
There's still going to be time premium because there's time. There should be time premium in any liquid market. Period. Full stop. That's the law of the land. There, if it's not, it means that it's an illiquid market. Any liquid market has time premium cooked in because there's time, right?
So if you sell the $25 one, you could sell it for let's call it $4.20.
Okay. So
you get $4.20 to $29.20. So you would get 50 cents. 50 cents divided by 28.71. That's over 2 weeks. It's 1.7%. So almost. That's not bad. So 1.7%,
3.5%, right? A month, maybe? Or no?
Yeah, but you're only protected down to 25. But that's not too bad. That's okay. I still think that's fairly safe in ETH right now. Protected down to 25. When's the last time it was $25, dude?
I bet. Let me look on iBit.
Oh, July 25th.
Because on something like this, maybe Bitcoin's a little bit safer.
True.
And let's go into the August dates. Let's go out August 15th. Okay, let's go to August 15th. And we are, what did it do? Yeah, we're iBit. Let me get over here a little bit further. So we're currently at 67. I would go down like deep. See, these are much more liquid. Look at these.
Yeah.
Well, makes sense, right? Bitcoin.
So how deep you want to go?
Yeah, I mean, I would go as close to 60 as I could get. But look how tight those spreads are. Even there, 5 cents.
That's good.
Shiza.
So if you got a $60 one,
$67 one. So it's 65 cents.
So 65 cents divided by, okay. That's not as good. But
right. Remember, there's less premium over here, but there's also more price consistency.
You still get like 1.5% a month, 1.7% a month.
That's not bad. That's you're looking at 15, 18% a year.
Yeah. And with Bitcoin, look how stable it's been. Same with IBIT, whatever you want to look at it, however you want to look at it. It's held since what? Jeez, I'm going all the way back to July 10th. It's held in this range. Like, that's pretty dang good. So 2 weeks out, you're going to be pretty stable for that big of a drop. So even if the last time it was, all you got to look is a 2 week look back, right? Basically is what you should look. I mean, even if you look back a month, but if you look back a month.
For those of you that are trying to learn options, there are tons and tons of good materials on YouTube for learning about options. I mean, tons. So selling covered calls and selling cash secured puts is basic AF. So there's tons of places you can go to learn.
Really focus on learning that, because you don't need to do the complex stuff everybody talks about.
Yeah.
These iron condors and these complex butterfly spreads. I don't know if you need all that kind of stuff, but whatever.
Yeah,
Way to leverage
you're right.
more money,
Steve is right. Liquidity is a big deal. So that trade probably is easier. Well, it's much easier to get that trade done in IBIT than it is in ETH, just because of liquidity. And man, listen, 1.5, 1.7% a month of just extra for using the margin. Now you got to define, so what do they charge you for margin? I know there's some fee, right? So you got to make sure that you're, whatever that fee is you're making more than that fee. But there you go. All right. Should we get behind the wall and look at what a portfolio, if we were going to build a portfolio right now, let's say the $10,000 portfolio, the starter kit.
Let's do it.
What that look like? All right.
Behind the wall time.
I see you. Here, let me go to this cool thing right here. I'm gonna go to this thing right here. We go like this. We go like this. We go like this. We go like this. We're gonna go here. We're gonna touch this. We're gonna go here. And then we're going to do this.
Going behind the proverbial wall now to continue the broadcast privately for the digital investors and digital private clients. If you'd like to join us, simply go to nickblacknext.com and subscribe to one of our plans and immediately take advantage of our library of tools, tactics, and information. It's all designed to help you learn, grow, and manage your portfolio like a pro. Join us now.